Hi, welcome to this video day. We are on the 5th of February. We're on Wednesday. We're just going to be looking at a simple strategy tip to help increase profits, and it's to do with selecting the best Forex pairs to trade. When you select the best Forex pairs to trade, go top to bottom, not from the bottom, okay? What that means will become a little bit clear in a moment. I'll just explain how this concept works. Now, in terms of when we do a weekly forecast, and regular viewers will be familiar with it, we will normally cover about 20 pairs in that forecast. Now, overall, each day analysis that we do here, 40 pairs. And a frequently asked question to us is, you don't trade all those pairs, do you? No, we don't. We slim it down to a much smaller number, and I'm going to explain how we do it. Now, we cover 40 pairs because, different traders who are members of ours have different pairs. They can trade different interests, different strategies, etc. So we cover a lot of pairs, but just going to go through how we slim the number of pairs down. Now, in terms of last week, it was one of those weeks in the market where just about everything went the way we thought it would, as I said in our forecast. Now, you don't get them very often, but it's always good when you do. Now, our trades in the market are a lot less than last week. We're probably down by 70%, banking out profits, reducing exposure, now getting ready to gear up and do some really big hits. And one pair in particular is on my radar. I'm going to hit it with big size. If I'm right, I'm going to make a really good profit out of it. If not, it's going to be a relatively small loss. And those are the opportunities we're always looking out for. Regular viewers will probably have guessed the pair I'm referring to already. Now, in terms of doing an account structure, so you're looking from top to bottom to get the best pairs, and also how to manage your open positions, I'm just going to go through some general tips. I've written up some points on a storyboard. Now, in relation to this, I will do a PDF which has got more info in it in terms of how you can do this sort of trading strategy tip yourself. Sorry, I forgot what I was going to say. Right, now what we are going to do is we're going to go and take a look at the points in more detail. Also, if anyone individually wants help with structuring their trade selection and best trades in relation to their strategy, just feel free to email me. But I will be putting a PDF together, and you can get that by joining our free mailing list. The link beneath this video. Right, let's go to the points and discuss them in more detail. All right, let's have a look at top-down structure in terms of selecting out the best trades, and also how to manage your trades as well. Now, in terms of when we view Forex pairs, we do not just look at a pair and look at the chart formation. We don't look at it in isolation at all. We want to see how that pair relates to the Forex markets overall. We also want to look at the financial markets generally, which the Forex markets are obviously impacted by. So we're going to look at stocks, bonds, we're going to look at commodities as well. So we're going to do simple sentiment and fundamental analysis. Now, a lot of new viewers who are watching this video might be thinking, well, I can just do it with price action alone. Well, try it and see how you get on. Markets are very noisy. Price action, it comes out the sentiment and fundamentals. And I know when I stress this point frequently, there's a lot of people saying you do just price action. They can't even do a trade. In terms of giving an entry, stop and target, it's all in hindsight or vague advice. See, if you want to be a hobbyist, then you can do that. If you're going to take the Forex market seriously, you need to do simple sentiment and fundamental analysis, and it is not difficult to do. Okay, now I'll come to that in a moment, but in terms of major theme of the market you should be aware of at this moment in time is risk on, risk off currency. So the markets are very focused on that. You need to know which are the risk on currencies, which are the risk off currencies, and how they all relate to each other. I've done a video on currency grading which you can look up. Simple examples for this video are obviously the yen, number one safe haven currency, dollar second, risk currencies and the majors, commodity currencies, Most risky currencies of all, emerging markets or exotics, okay? But obviously you've got grading in between. I can just look up my video on currency grading for more info, and I'll also put it with the PDF when I put it on the mailing list. Now, you need a metric to establish overbought, oversold currencies. Now, in terms of the metric, what is it? Well, basically, we'll look at historical fair value. We'll look at the economic outlook and the interest rate outlook, and we'll look at the sentiment of the markets. Now, is that difficult to do? No, it isn't. You have to look at every bit of economic data. You don't need a degree in economics. You can do it very simply. Now, in terms of recent examples, I'm going to just go through overbought and oversold currencies because we're always focused on trying to find clear-cut oversold currencies, clear-cut overbought ones, and basically going long the oversold over the overbought. And yeah, but in terms of recent examples, in the last two weekly forecasts, the GBP, JPY, oversold, overbought on the other side, CAD, NZD. Just basically trade overbought, the oversold, did really well for us. And the GBP has been oversold for months, and we've done really well at trading the GBP long. Recently came out of our long GBP trades with good profits. We are looking to reinitiate the longs. Now, in terms of a quote, it comes from Charlie Munger, basically Warren Buffett's partner. Go fishing where the fish are and the fishermen are not. Now, regular viewers will know I really overstress this point, but it's worth stressing because it's very important. If you want to maximise the amount of good trades that you get, focus on pairs that most traders are not looking at, because that's where the fish are, that's where the profit potential is, and the fishermen are not there, not just other retail traders, but also the big institutions that love doing stop hits and creating noise. So more pairs, the better. I know I stress it frequently, but it's true. Another point which I've made pretty frequently actually is do not diversify. Okay, now put MPT fails. MPT is modern portfolio theory. It came out a few years. It was by a few years ago, probably 30 years ago now, actually, written by two Nobel Prize winners. One of them was Markowitz, about if you spread your risk amongst a number of pairs, you are basically going to reduce the downside on your trading account and enhance profit potential. It's total nonsense. It's been disproved. Diversification basically does not reduce risk, it just dilutes profit potential. And most great traders now agree with that. Just take, for example, Warren Buffett, George Soros, Stanley Druckenmiller, Paul Tudor Jones. It doesn't work. You want to concentrate your bets. So we would normally pick out 2 to 4 ideas or trades. Now, what I mean by trades, we pick an individual pair. When I mean a trade idea, we will pick, let's say, one currency and go against a few others. So everyone will be familiar with the recent way I've done this, where I've taken the GBP, gone long CAD or against the CAD, the NZD and the AUD, treat it as one trade. Okay, so you can do that. But you don't want too many bets. Yeah, the idea that if you've got 10 trades on, your winners will help cancel out your losers and maybe give you an overall profit is nonsense. If one trade can go wrong, so can 10. Yeah, it's just the way it is. You're better off to focus on the really high odds scenarios. And yeah, giving you a high odds scenario already, which is obviously go against clear-cut oversold, go with clear-cut oversold currencies against clear-cut overbought currencies. Now, you're not always going to get it clear-cut, okay? But when you do, go for those scenarios. Now, in terms of the way we trade, most of the time we're going to hit hard at the start and take 50% off. The 50% coming out will depend on the volatility of the pair. We use Bollinger Bands, you can use ATR. You want to get some profit in the bank just in case it doesn't run. And hopefully you will get your stop up, get out with a profit or a small loss. But yeah, all the trades we do are effectively swing trades, but we want them to turn into long-term trend following trades, but we'll just swing trade all the time. And hopefully we can keep swing trading within a long-term trend. Yeah, you're not going to get that many of those sorts of trades, but when they come around, stick with the big trend and discuss taking 50% off and how to put it back in other videos. Now we will go bottom fishing when a big move looks likely. So we'll just put a trade in. We don't need really clear-cut technicals. We're working on the fundamentals and sentiment behind the chart. Keep the technicals in mind, and then we'll add in. Okay, got a trade in mind at the moment. We're just about to drop in a trade. I'm going to add once at least. I'll probably add 2 times and look for a high odds breakout. Like I said, regular viewers know what trade I am referring to. Now, in terms of the concept of moving equity, it's something professional traders do, which retail traders don't. When professional traders have trades on, they're always looking for better trades, okay? If a better trade comes along, if their trade is at a loss that they're already in, or maybe a small profit, they've got no problem shutting that trade down and going for the better pair, or the pair they consider to be better. Retail traders, very often will get in a trade, it won't do much, you'll go into a loss, maybe they think, I'll get back to break even, I'll come out, or I'll just wait to see how the trade pans out. You want to be very proactive. You want moving equity. You do not want to be caught in dead markets for too long. Okay, so if there's a better pair around, shut down the pair you've got, even if you think it's going to go right. If you think the other one's going to go more right, go for the other one. So we're always focused on that. Dealing with the limitless market, there's no set end, you have to call it. That comes from Mark Douglas. He makes that point in his classic trading books, Trading in the Zone and the Disciplined Trader. It's very true. The market's always right. You can only be wrong against it. When you've got enough profit, get some in. Okay, and do not get complacent. Now, in terms of, from our perspective, our risk exposure is 5 to 10% if everything goes wrong. If we get 10% in open equity, we'll protect that. Okay, because you very often see it disappear. Now, last week we were lucky enough to be above the 10% in open profit. We're at 16, but we cut back to protect it. Actually, we did go down to 12 because we lost a little bit back. I'd perhaps be better off to take all in. Well, that's hindsight, but that's still very respectable return for us. You can't be perfect, okay? And never fall for that fear of missing out, that if you bank in profits in what looks like a fantastic market that's still going to go in your favour, if you're happy with it, you've got to take it. I see nothing wrong with that. It's your equity. You want to build it and build it within parameters. So for us, 10%, once we've got that open profit, we will move to protect. Now, this quote, common sense is not so common, doesn't come from a Forex trader. It comes from French philosopher Voltaire. And I think you can get a lot of trades by just using some common sense, okay? And what I mean by that, put trade broken glass. That's from Jim Leitner, the hedge fund manager. And I read a very interesting interview with him in the House of Money when there was an earthquake in Turkey, and he went and bought up a load of glaziers. Why? Well, of course, every window is shattered. In the areas he bought the glazers, he made a load of money. You think, oh, that's pretty good idea, pretty obvious. But it's always obvious after the event, isn't it? Now, there were some trades I felt, just use a little bit of common sense in the Forex market. So recently we were saying the coronavirus, we felt the Chinese were hiding the full facts. That's the way it looked like in the media. So the USD CNH, US dollar offshore spot Chinese yuan, should go up. The US dollar was already oversold. So we took a trade in that and it went up. It hasn't gone up as much as I thought it would. But a proxy Chinese currency, USD, SGD. Yeah, dollar deeply oversold. Singapore just so exposed to China. Worth a little trade, coming off major support. That one soared quite nicely higher. Also, in terms of a few weeks ago, I didn't want to trade the market itself because it was a bit wild. Crude oil. In my head, I knew crude oil was going to come down, or I had a strong conviction, but I didn't want to trade it because it was just so spiky. So I looked around for the currency that is most influenced by crude oil. It's the Norwegian krona, isn't it? It's not the Canadian dollar. Norwegian krona, heavily impacted, correlated with crude, come off a nice support level in the USD, and USD soared higher on the knock right to our target, which I showed in the weekly Forex forecast. I also did a video when we first started getting interested in that trade. So, look, in the news and look for, sort of a theme that you can exploit. You don't need any economic background to think that the USD is going to go up on the CNH and the SGD. You don't need any real, I suppose, deep knowledge of the crude market to know that it was very vulnerable to a fall. It just risen on those tensions to do with Iran. So, just a brief overview of the way we basically look to choose pairs. Now, in terms of this, when I choose out my pairs, I don't always get the best one. Sometimes I'll analyse a pair and do better than I thought. So it's subjective. And it does depend on the type of trading style you've got, your strategy, your risk tolerance, your profit objectives, and so forth. And I'll just give you an example of this. I know a trader who wants to make 5% per annum on their trading account. That's all they want to make. They're very happy with that. My advice to them is just sell the Euro USD because you get good carry. It's got limited upside. It kind of grinds lower, not much volatility. You use relatively high leverage to really maximize that carry to get the 5% over a year. So, different strategies will have different pairs that would be the best. But in terms, I think, for a lot of traders, I think, fast moving pairs that are volatile, come off big levels of support and resistance, that is a good way to trade. So that is the video. I will do my PDF on this and throw a few videos in relation to what I've been talking about here. But do not be intimidated by just doing simple sentiment fundamental analysis. It's a lot easier than most traders think, and it's what professional traders are going to do. Your hobbyist or your amateur will probably just go with price action, go for small moves, etc. I'm not saying price action traders can't make money. Some I know who are deeply experienced can, but most beginners who come in the markets and use it just pick flawed strategies, go for too smaller profits, etc., which I've mentioned in numerous previous videos. Right, that's the video for today. Thank you very much for watching me. As per usual, take care and have a good day.